about stocks this week. April's wholesale inflation comes in at lower than 5%. We'll find out what this means for your stocks. Rate sensitive in focus, expecting a rate cut, will give you the best bet. And Gaurang Shah reviews his portfolio. Welcome to All About Stocks, a show specifically meant for long-term investors like yourself. We've had a very exciting week at the markets. We saw a big sell-off on Monday and a massive rally on Wednesday on hopes of a rate cut. After April's wholesale index, inflation came in at 4.89%. We'll find out where the market is expected to go from here and what you should be doing with your stocks. This week, we're also going to take a very close look at interest rate sensitive stocks to find out what the best bets are for you. We'll answer some questions and design some portfolios. There's an email ID at the bottom of your screen. Feel free to send in any question you might have about your stocks. Of course, Ajay is here as always to update us on how the markets did this week. Ajay, also take us through those shocking inflation numbers.
Thanks for that, Faye. Well, the Indian markets have added quite a lot of weight this week. You know, it all triggered by when the WPI inflation fell below 5%, which is RBI's comfort zone on expectations that the crude and gold prices globally are going down, and commodities in general will ensure that the current account deficit is in the control here in India. That triggered a big round of buying in the banks on expectation that now that the yields have fallen down, the mark-to-market gains will be accrued in the first quarter onwards. So we saw the bank Nifty at 4%, led by Kotak, SBI, PNB, ICICI. You name the bank and it was seen gaining. Also, a lot of FIRs have been buying continuously. Around $750 million worth of buying have happened in the last week alone. So all in all, dealers believe that Indian markets, which are hovering at 30-month highs, may actually go much higher in the coming weeks and may take out the previous highs of around 650 also in the coming weeks.
All right, okay, thank you for that information. Joining us today is Gaurang Shah, Assistant Vice President at Geojit BNP Paribas. Gaurang, thank you so much for joining us on the show to answer all of our questions. We've had a very interesting week at the market. Sensex up 500 points, the Nifty past 6100. Do you expect it to keep going from here? Are we going to see more volatility or are we going to see higher levels?
Well, to expect continuation of an uptrend, I think it's a little bit more to expect. Honestly, I would be more pleased to see some amount of consolidation and profit booking. And if you actually go to see the triggers that are driving this market on the upside, first of all is of course the FI investment, which is by and large been very positive. Secondly, with the data points on the IIP inflation and of course the GDP, the expectation is that the RBI would preempt and rate cut before the next policy date in June. That will definitely excite the banking, interest-sensitive market and of course the overall equity market. Then you have the numbers which have been unfolding on the positive side as far as the corporate earnings are concerned. So, these sentiments are really building up to the market upside. And my belief is that after seeing some consolidation, some little bit of profit booking, I don't think it will be very difficult to cross over to 60 to 45 and then possibly go towards the all-time high that we've seen on the Nifty and Sensex. But it is prudent to see some consolidation and some base building.
In terms of a rate cut from the RBI, what are your expectations now?
On a conservative basis, 25 on the repo, 25 on the CRR. I think that should do for the time being. And then again have a review on the, of course, CAD is the biggest worry for the RBI governor. But that also we believe with the kind of initiatives that the government has taken, a lot of burden will be off their shoulders in terms of subsidy. And there would be some amount of improvement in the import-export data that we've seen. And of course, with the curbs that they have put in place as far as gold imports are concerned, this all should definitely augur well and bring down the CAD. That will again give a little bit of more elbow room for the RBI governor. So as of now, we are working with 25 both on CRR and repo.
Can I also understand from you, if we are expecting further rate cuts from the RBI, among all of the rate-sensitive sectors available to us as investors right now, which one are you most bullish on?
Well, firstly, the positive impact will come on the banking. So as brokerage house, I think in our earlier conversations too, I have been very positive and comfortable with private sector banks. And the numbers quarter on quarter speaks for themselves. So private sector banking will be the first choice if in case of interest rates comes as per our expectation. Second, directly correlated will be, of course, autos over there, M&M. And NBFCs, something like an LIC Housing Finance, definitely excites us to a great extent.
Alright, we have a question on the auto sector. Shashank is written in. He holds Tata Motors, which he bought at 239. Mahindra & Mahindra, which he bought at 830. He tells us he has a 1-year perspective. He wants to know how long he should hold on to these stocks for. He's making a profit on both of those stocks. But we know auto sales have been dismal. Tata Motors global sales have been bad. And Mahindra & Mahindra is now offering discounts. So how much can he hope for as far as these stocks are concerned?
Well, firstly on Tata Motors, your concern is on the global, my concern is on the domestic from brand Tata Motors. I think if you just have a look at the last 3 to 6 months data, month-on-month sales numbers, there has been a disaster, and the offtake as far as passenger vehicle or otherwise has been on a consistent downtick. So I am worried on the domestic side from brand Tata Motors numbers coming down. On the global side, well, you cannot definitely go on riding comfortably on JLR because those are premium segment vehicles. And if there is not going to be a major turnaround or the appetite for these models go down comparative to the other competitors, then definitely there is something that Tata Motors and the JLR both will have to start reworking on. What I have been given to understand is that they have put a team in place as far as R&D is concerned, and they are possibly going to launch anywhere between 4 to 6 new models as far as PV segment is concerned. This I am talking about is Tata Motors. But yeah, we are positive on it, and if the interest rate cycle turns around, then there is going to be some amount of positivities. 330 to 335 is what we expect Tata Motors to go and target over a longest time horizon. On the flip side, M&M is a play with all the verticals in place: passenger vehicles, CVs, LCVs, two-wheelers, agri-equipment, everything, and of course the acquisition of SsangYong. So this helps M&M in all the ways possible. 1,035 to 1,100 is what we are looking on M&M from, again, a medium to long-term point of view.
We have a question on the infrastructure sector. Jaswinder has written in 100 shares of GMR Infra bought at 82 rupees. Should he continue to hold on to it? GMR Infra ended the week at 24. They are eyeing new projects, but does he have any hope of recovering the money he invested in this stock?
Well, the company will have to do real miracles if they have to go anywhere close to the acquisition price and beyond so that the investor makes profit, and that looks very dismal as of now. And given the kind of overhang in terms of land acquisition, working capital that some of these infrastructure companies have, I think it's a big question mark. So my advice to the investor would be, if at current levels you want to sell out and you have the appetite to book your losses, you definitely do that. But getting sentimental to your stocks if they are incurring losses is not really advisable in the equity market. My advice is exit from here if you have a little bit of more capital to redeploy. I think go and buy IRB Infra, again in the infrastructure space, but in comparison, a very stable company financially, performance-wise, order book-wise, order execution-wise. As from current levels as a disclosure, we do have a positive coverage on IRB Infra with a price target about 175 to 180 if I'm not mistaken.
Alright, let's move on to our portfolio question. Now, Meetu Gujral has written in. She has the following stocks in her portfolio. She's a long-term investor. She wants to know which of these stocks she should hold or sell. First on her list, 5 shares of Ambuja Cement bought at 140 rupees. Now, we know there has been some trouble there as far as the cartelization case is concerned. There's also a fine that Ambuja Cement might have to pay. Along with a disappointing set of numbers, should she hold on to that stock?
She's making a profit on the stock, and yes, I do agree with the cartelization and the penalties that some of these companies will have to pay. Of course, they have the case to go forward and appeal to higher authorities, but maybe how and which form it will turn out to be remains to be seen. So, I mean, she's making profit. Numbers are not really exciting to us. My advice is to sell out, and like I advised just in the earlier question, I'd go and buy IRB Infra at current levels where she bought Ambuja Cement. She's getting profit. So exit from Ambuja Cement and go and buy an infra play in form of IRB Infra.
The next stock on her list is Coal India. She bought at 490 rupees. Any hope there of recovering that investment, Gaurang?
Yeah, I'm quite optimistic. The only problem is 490, the acquisition price, and with the overhang in terms of mining issues, in terms of issues with NTPC as far as the quality of coal is concerned, and of course now with the pooling prices that has been put into place. But here is again an idea. You know, she can possibly sell out Gujarat Ambuja, like I mentioned. She can buy IRB Infra, or whatever money she gets out of Ambuja Cement, she can go and buy Coal India because it is at a much more lower level from her earlier acquisition price. Thereby, she will average it out. She will have better number of shares. And our price target as of now, which is what we are working out with, is somewhere close to about 385 to 420. So if she averages out, her average will come down and she can break out in profit as far as Coal India investment is concerned.
We'll very quickly go through the remaining two stocks. Here's RIL, 10 shares bought at 1,050. RIL ended the week around 835. She's obviously been buying stocks on a high. What would you recommend she does with her RIL holding? Is it going to recover? It's had a good week, but is it going to recover that level?
Expect a turnaround as far as the company RIL is concerned, and we have the gas price review coming up fair. So I expect that will be an incentive for the company to start pumping up more gas if the gas prices are reviewed upside. So my advice is to hold on to RIL.
And last on her list is Reliance Power, bought again at 270 rupees. You'll see that stock ended around about 81 rupees for the week. Again, is there hope there, Gaurang?
No, absolutely not. And as a disclosure, we have a tactical, convictional buy call, a sell call on Reliance Power. So exit Reliance Power ASAP 270. I don't think you give another 5 years to Reliance Power, it will be able to achieve those targets.
If we take a look at her portfolio, there seems to be a fundamental flaw here. She is buying these stocks when they hit a high. Would you have any advice for her going forward on how she should manage her stock portfolio?
Try to protect your capital. I mean, you need to take immediate steps when you see your capital eroding more than 5-10% and possibly take action on that, not wait for about 50, 60, 70, in some cases 100% erosion, because that might leave you with absolutely, capital getting eroded. So my first advice is that take care of your capital and safeguard it. And secondly, take advice as and when your risk appetite wise, your capital starts eroding, take immediate steps, remedial measures.
Alright, so we hope that helps with your portfolio. Remember, you can send in your stocks portfolio to the email ID that's at the bottom of your screen. After the break, we'll give you Gaurang's portfolio. This is a portfolio designed for those of us who have long-term views on our stocks. We'll also discuss what happened to JM Financial and what you should be doing with that stock. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. Remember, this is a show for long-term retail investors. We're going to help you find the right stocks in the market for you. Gaurang Shah is still with us, helping us with our stocks investments. Now, for those of you who are regular viewers, Gaurang designed a portfolio for us some time ago. He picked stocks that together complement and work as a good long-term portfolio for retail investors. Now, every time he's back on the show, this is every few weeks, we review his portfolio and we see how it's done. I'm first going to give you a list of the stocks he picked out for us. IndusInd Bank, Cipla, Godrej Consumer Products, Tata Steel, M&M, ACC, Mindtree, Apollo Hospitals, and IRB Infra. Now, overall, this portfolio has given us a return of a little over 5%, which is impressive. Gaurang, are you happy about how your portfolio is doing? And is Tata Steel there causing you any concern?
Quite happy, but pain in terms of Tata Steel. And my belief is that, the entire metal pack has been going through a lot of suffering and, of course, underperformance. The sector totally is out of flavor. But, over a longer period, my belief is that infrastructure, construction theme picks up. Cement, steel are the basic core inputs in terms of making a good infrastructure. And, of course, export market should also revive. So, it is a pain right now, but I hope it will definitely turn into gain.
Well, you are outperforming the Nifty, even if it's slightly on the time horizon that we have right now. Would you like to make any changes in your portfolio? Do you think it's fine the way it is and we should just continue to hold it?
No, my diversification is extremely justified. And I remember when I actually created this portfolio, your question was that why this diversification and why into 10 stocks? Well, my belief is, and actually, when the market was underperforming, I think the Nifty went down more, whereas my portfolio just corrected close to about 6 or 7%, whereas Nifty went down by close to about 10 to 15%. So this diversification is helping me, and I wouldn't like to make any changes. Only pain in the entire portfolio is Tata Steel, which again I reiterate myself that I am quite positive that it will turn into green as I have a longest time horizon. So I'll keep my portfolio intact as of now. Maybe next time when we speak again, I might like to do any changes.
Alright, so that's Gaurang Mishra's portfolio. Remember, we began this portfolio on the 14th of December. It's so far given us a return of 5.67. Compare that to the Nifty. That's returned about 5.22 at the same time, which means we're beating the Nifty. And Gaurang, they're not making any changes because he's positive that this is the portfolio to hold on to. I'm going to give you a quick recap of the stocks we're talking about. IndusInd Bank, Cipla, Godrej Consumer Products, Tata Steel, M&M, ACC, Mindtree, Apollo Hospitals, IRB Infra, and Kane India. Of course, if you want more details on that portfolio, feel free to write to us, and we'll be glad to send you a copy of that list. We have some more questions for you, Gaurang, and this one is particularly on JM Financial. Deepak has just named that he holds 1,900 shares of JM Financial, which he bought at 25 rupees. He wants to know if he should continue holding that stock. It ended the week at 26.70. It had quite a run-up. I'm going to bring in Ajay first to give us a wrap on what happened with JM Financial this week. Ajay.
Well, the big deal which was announced this week was Vikram Pandit along with one of his ex-Citi colleagues checking in and JM Financial. So it was an interesting transaction. The stock gained 25% ahead of that and continued gaining 10-15% even when the deal came out in the open officially. So 3% direct stake in JM Financial, Vikram Pandit along with his ex-colleague will be taking. They would be investing $100 million in the NBFC arm and will together be floating another $100 million worth of distressed asset fund. It is understood widely that there's a big market for distressed asset funds in India, that all these banks are holding thousands and crores of non-performing assets, which funds like distressed asset funds run by Vikram Pandit and JM would be perhaps targeting. So strategists on the field believe that JM Financial fortunes could definitely change with a man of such repute coming on board along with his ex-colleague. Up till now, JM Financial was struggling in investment banking because of a very competitive landscape. Broking is shrinking, and market cap was just about $500 million compared with some of the large cap like Edelweiss, Motilal, etc. Now, Vikram Pandit is putting $100 million up front, and the whole host of opportunities open up for JM Financial now that the man is on the board, and strategists believe that going forward, a lot of other announcements are also expected in terms of future funds and capital raising. So all in all, the fortunes of the company look much better from here on.
Thanks, Ajay. Gaurang, like Ajay was telling us, speculation about a banking license. Vikram Pandit now involved with the company, which is a very big name. What are the long-term prospects for that stock?
Well, the stock has actually, on fallback of this news, gone and made a new 52-week high. I think somewhere close to about 26 or 27. It definitely looks quite positive with Mr. Vikram Pandit coming in and buying a stake. Now, whether this will translate into JM Financials getting a banking license and then, of course, rolling out those banks and getting another new vertical to add to their presence, which they are already into NBFCs now, then possibly into banking. It's a little bit of longish short. So my advice is that, the news flow is positive. You bought it at 25, downside looks protected. As of now, my advice is to hold on and please keep your eyes and ears open in terms of any kind of news flows related to the company for their new banking license for it that they are wanting to go ahead and do it. So you would definitely need to track the stock very, very closely.
Well, Gaurang, for those of our viewers who don't have JM Financial in their portfolio, would you say now is a good time to buy, or has that time already passed us?
Again, timing is very difficult. But given the outlook with the Sensex and Nifty reaching higher highs, I guess most of the brokerage stocks will again start hogging the limelight. So if you have a equity market which is positive, you have a trigger in terms of banking license for it. Well, at current levels, you can possibly start deploying in a small quantity, and then when you have a correction of 3-4-5%, you can go on adding to it. But like I had mentioned earlier, I think you need to track these news flows very, very closely, because that is going to help the company to give a breakout trigger.
Let's move on to a couple more questions on those rate-sensitive stocks we talked about. Manish has written in, he has 900 shares of HDIL, which he bought at 80 rupees a share. He wants to know if he should hold on to that stock. It ended the week at about 60. Given all of the trouble the company has had, does it make sense to hold on to it?
Absolutely not. I think close at 60, you have another trigger in form of rate cut coming. We'll see interest sensitive like real estate, going up. Identify that as a selling opportunity. If company debt is an issue, I think for some minuscule 60-70 crore, the promoter had to offload his holding. In terms of execution wise, there's a question mark, no clear visibility. And remember one thing, Fred, this stock has started falling from levels that we have known it had achieved to sub possibly 40-50 levels, and then again it has bounced back. So use these pullbacks on the higher side to exit from HDIL. And since I'm giving an advice to sell and exit from HDIL, it will be prudent on my part to suggest two stock ideas. One is of course Dish TV at 67 with a target of 85, and the other one is Development Credit Bank, maybe close to about 45-50 rupees trading with a target again of somewhere close to about 65. And on Dish TV, I think 85 should be a target, keeping a little bit of longest time horizon.
Well, Santosh has written in, he has 100 shares of L&T which he bought at 15.25. He wants to know if he should hold on to that stock. L&T ended the week at 16.23, so he's making a profit. But given where L&T is in terms of visibility on his projects for the next 3 or 4 years, does it make sense to hold on to it?
I think this is one stock in the cap goods stroke engineering sector which has outperformed its peers to a great extent. Performance-wise, par excellence, management par excellence, order book excellent, execution excellent, and of course debt virtually negligible or close to about minuscule. And of course the commentary of the management during the last quarterly numbers makes me feel that this particular stock has only got a way to go up rather than go down. You may have days of small corrections, but again you will see buying interest coming into L&T. So hold on to it. Our target as of now is 1650, but we'll definitely revise it upwards.
Alright, hold on to that stock. Quick break. On the other side, we'll talk about Godrej Consumer, Axis Bank and Lupin. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. This is a show for long-term retail investors. Gaurang Shah is with us helping us pick out our stocks. It's time to look at Gaurang's report card. Now in June 2012, he recommended Godrej Consumer to us. It was trading at 560 then. He gave us a target of 675. Once the stock hit that target, he revised the target to 880. And now the stock has crossed the new target as well. Gaurang, first of all, thank you for that strong recommendation. And for those of our viewers who bought Godrej when it was trading at 560, would you recommend they hold on to it even further?
Well, hold the stock and trail the profits on the upside, fair, because these stocks have just come into the spotlight of some of the other people. Well, again, identifying such stocks at lower level and seeing them grow, and especially for all your viewers who have invested and seen their capital grow, my advice is to stay put to it. Next target, I would like to revise it upwards to about 935.
Alright, a fresh target there at Godrej Consumer. Remember, Gaurang recommended this stock in 2012 when it was trading at 560. We're now aiming for 900 on that stock. We have one more question that we can quickly answer before we end the show. Pramod has written in. He tells us he wants to now put together a long-term portfolio for his stocks. He says he'll buy gradually and hold for over 10 years. And he's given us a list of choices within sectors, and he wants us to help him choose. Now, within the banking sector, between Yes Bank, Kotak Mahindra Bank and Axis Bank, which one would you prefer he buys?
I would go in with Yes Bank. Excellent numbers, so definitely has the capacity of re-rating from a mid-cap private sector stock to maybe a higher up large-cap stock too.
Alright, within the pharma sector, Lupin or GSK Pharma, which one is better for him? For someone who has a 10-year horizon?
I would say buy Lupin. GSK, of course, is an MNC pharma company, but Lupin, given the kind of performance, there is potential for it to get re-rated again.
And of course, I think our last question becomes a little redundant. He wants you to choose between Dabur and Godrej Consumer, between the FMCG group. I'm also going to throw in ITC. We saw some strong numbers come out this week. Now, between those three, which one would you like them to buy?
I'll definitely go for Godrej Consumer.
All right, Godrej Consumers there. We hope that helps. Remember, if you'd like Gaurang to take a look at your stocks, send them to us. There's an email ID at the bottom of your screen. Gaurang, it's always a pleasure to have you on All About Stocks. Thank you for the strong recommendation. Like I said, every time Gaurang is back on the show, we're going to review the recommendations he gives us. So you can send in any question you have for him. Thanks for watching.